Hey, it's been a while. Thank you for having me on today.
All right. Now, the first topic I'd like to talk about is the election just a couple days ago, of the midterms. Now, essentially, no big surprises. We saw that the Democrats did take the House and the Republicans kept the Senate. That's what most people were expecting. Now, one of the things that was kind of interesting is that the stock market actually rallied on the news and precious metals fell a bit. What is your perspective on the reaction we saw from the markets? Why did we see, I guess you could consider positive reaction to the Democrats taking the House?
Yeah, I mean that's a great question. For all the talk of a blue wave or a red wave, I think the best description I saw of it was like a purple puddle. Like not a whole lot happened. It basically was what people expected, and the reaction to it I didn't see as all that surprising, especially following the Trump election back in 2016. Regardless of your feelings on Donald Trump, leading up to the election back then, he was the underdog in a big way. And the markets, and I think most, analysts, which do tend to, I think, trend towards liberal, I don't know, maybe not, but certainly the analysts, their take back then leading up to the election was that if Trump were to somehow pull this off, it would be a huge shock to the markets. It would be bearish over the short term. And when the results began to trickle in on that night back in 2016, then it started to look like, hey, he's taken all these states we didn't expect him to. He's going to win. Within 24, it was probably even less than 24 hours, the markets totally changed the narrative. And it no longer became we have this unhinged guy in the White House, or it's going to be super bearish for the markets, for the economy, et cetera. All of a sudden, you saw this huge narrative shift towards the Trump tax cuts, the infrastructure bill, healthcare, all of that. And all of a sudden, it was super bullish for the markets. And we saw a huge rally that basically ended in January of this year since then. And so the reaction to this election doesn't really surprise me either. I saw it as being, if you're going to kind of follow that line of thinking that, hey, Trump being elected is really bullish, that if Republicans were to hang on to both the House and the Senate, you would see markets rally a lot. With a split Congress, you'd expect more gridlock. And yet, as you said, they found a way to spin it as bullish. I think the media, as a whole, it's all about controlling the narrative when it comes to this type of stuff. I think the real important question that we have to ask is like, does it change anything for the markets, for the economy going forward? If you'd like me to speak to that, I tend to think that no. I mean, there's going to be some important things that do or don't happen because the Democrats now have the House. But as a whole, I think that some of the major underlying fundamentals and factors for the economy that I see as very bearish are still in place.
And if you wanted to get into some of these changes that might happen because the Democrats now have the House, what are some of these?
Well, the first one that comes to mind would be the Federal Reserve, right? Whoever's won the House or the Senate, the Fed made it pretty clear yesterday with their minutes that they're on a path of tightening. Jerome Powell is on a path to continue to tighten interest rates, continue with quantitative tightening. And I see that as very, I don't know, traders pay attention to it, but it's certainly something that they should pay attention much, much more. I get it. I get that they want to create some sort of a cushion between now and the next recession, or maybe they're just totally oblivious to I think the fragility of our economy and the world economy. But regardless of their intentions, they're tightening the noose around the neck of the economy right now. And, it's only a matter of time before the next interest rate becomes their last interest rate hike becomes their last interest rate hike, or quantitative tightening comes to an end and quickly reverses to quantitative easing. It's only a matter of time. And I see that as a much larger factor than something like the election. Another major one that I think oftentimes is forgotten is the trade war. The trade war has had a huge impact on China's economy and their stock market thus far. Unfortunately for them, or fortunately, depending on how you look at it, it's kind of coincided with some attempted tightening by their own government and some economic weakness. And so to pile the trade war on top of that, it has hurt them. You see it reflected in the stock market. You see it reflected in decreased economic activity. But I think that the impact on the U.S. economy is really been people just haven't seen it reflected yet. But I think it's absolutely occurring. It just hasn't been priced in the same way that it has in China. So that'd be another one that I see as a major bearish fundamental for the economy, regardless of what you feel about U.S. jobs or U.S. trade or whatever. I still think that it's going to be bearish, the tariffs and the trade war as a whole. And then, of course, there's just kind of bigger long-term trends, right? Now that Democrats have the House and things have been shaken up a bit, that doesn't change the fact that the sovereign U.S. sovereign debt continues to be a major problem. Deficits continue to skyrocket. As a whole, our economy, the global economy is drowning in debt. But even just with the sovereign debt problem, had Republicans taken the House and the Senate, I'd be tempted to say that we'd see higher deficits, even though they're conservatives. I think we've seen in the last 2 years that fiscal conservatism is not very popular for when conservatives are in power. We've seen record high deficits. We've seen the Trump tax cuts, which I'm not necessarily against, but we haven't seen any spending cuts. And so I'd be tempted to say that, had the Republicans hung on to the House, that we'd see higher and higher deficits going forward. But we know that Democrats are just as willing to spend as well. Nancy Pelosi came out recently talking about how she's willing to make a deal regarding infrastructure spending going forward, within like 48 hours of the election. And I think that just goes to show that both parties are more than happy to spend money to increase the debt. And an infrastructure bill, I think, is certainly one that we can keep an eye on as being another thing that's going to provide a short-term boost to the economy. But more and more, I think that this fiscal stimulus is going to have less and less effect. It's going to be the classic Minsky moment where increased debt actually contributes to less economic growth over the short term rather than more economic growth. But those are the big ones that is the election big? Sure. For social issues, for political issues, things like immigration, and for many other issues. But when it comes to the economy, when it comes to the debt, I don't see things having changed a whole lot in the last week.
Now, with regard to the stock market, what is your perspective on, do you see longer term that we won't continue to see the stock market rise? Because the immediate, like we were talking about at the beginning, the immediate reaction from the stock market was bullish on the results of the election.
Yeah, it was. And I wouldn't be surprised if, through the end of the year, they continue to keep prop up stock markets for a couple of reasons. Around the holidays, it's just not a good time to let stocks fall. Also, I think I've been seeing a lot of different hedge funds and other traders like that are really chasing return going into the end of the year. Basically, they were hurt a lot by I think the first half of that October volatility spike and the drop in the markets. And then the second half, or even since then, the rally that we've seen since then, I think a lot of them turned so bearish they took off so many of their longs off the board and maybe added to their shorts that this rally, they maybe haven't even been able to benefit from that as well. So I think certainly we'll see all the major indices. I wouldn't be surprised if we saw them continue to climb through the end of the year. I don't know if we'll break the highs that we saw at the beginning of October, end of September. But then beginning of 2019, that's, the first half of 2019 as a whole, that'd be a big period of time where I see a lot of another increase in volatility, drop in stocks, and that could be, the final drop, the drop that leads to the eventual bear market. I could be wrong. People have been predicting this type of stuff for a long time now. Going back to 2013, the drop back in 2015, 2016, people were saying this is the end. Of course, we saw new highs after that. People were saying it back in February. People were saying it very recently when we saw stocks go into correction mode. But of course, what has changed during that time? Interest rates are rising. The Fed continues to raise their interest rates. The U.S. 10-year is at its highest level in many, many years, currently around like 3.2%. The U.S. dollar, what is it, the 3-month LIBOR rate recently reached like a 10-year high. So what pops bubbles ultimately, it's rising rates. Like debt can increase for a long time, and people have talked about, the end of the U.S. empire, the end of this economic expansion because of more and more debt. Well, yeah, eventually that debt's going to matter, but what really makes it matter at the end of the day is rising rates, and so it's just really a question of what's the pain point? How high did they have to rise before we see stocks drop significantly? We saw, I think people forget, but back at the beginning of October, when stocks really dropped off from their highs, one of the big catalysts for that move was a huge spike in treasury yields. We saw the U.S. Treasury bond, the 10-year, spike up to around 3.2% during that period of time. That was one of the big catalysts for that drop. Now imagine what happens if they continue to rise to 3.5%, 4%. If we see LIBOR rise by another, half percentage point, 1 percentage point, Fed and a couple more rate hikes. It's a bubble just waiting to pop. I think the bubble is much more fragile than it was back in 2008, and I don't think rates have to rise to the same levels they did back then to pop the bubble back then.
Now, as for precious metals, when this bubble pops, do you see precious metals falling like they did in 2008, at least for the short term right after the stock crash?
Yeah, potentially. People make that comparison a lot. How we all know the story that leading up to the financial crisis that really culminated in the second half to 2008, beginning in 2009. We saw precious metals, and silver in particular, drop from, I think it was like $13 or $14 to like $8 or $9, in that range. I think we have very different fundamentals this time around. First of all, leading up to the financial crisis, precious metals had been in a very long bull market that dated back to the early 2000s. Silver had risen significantly during that period of time. Obviously, we're in a totally different situation right now. I think many traders, even if they're not huge into precious metals, they'd agree that, hey, based on some of these recent fundamentals and technicals, whatnot, silver and gold look undervalued, oversold, undervalued. And so I think that aspect of it is very different. Do I expect some sort of a drop? Absolutely. It all depends on, I think, where the dollar heads. And of course, I think where the dollar heads during that period of volatility during that crash is going to be dependent on what's happening around the world. Is this going to be an American-centric type collapse starting out? Or is it going to start abroad? Is this economic weakness that we're seeing in China, is that going to continue and we're going to see more yuan weakness and dollar strength? Is it going to originate out of the Eurozone? Is it going to be emerging markets continuing to spread into both of those markets that I just mentioned? If we see that happen, if we see a lot of euro weakness, pound weakness, yen weakness, yuan weakness, etc., then yeah, we're going to see some dollar strength, which I think is going to be very bearish for stocks, despite the inflows into things like bonds and U.S. stocks. A rising dollar, I think, is becoming increasingly bearish for the stock market. But if we do see that spike, then yeah, precious metals could hit new lows during that period of time. I talked about in a recent video of mine that when we get into these periods of very acute distress in the markets, financial crises and whatnot, it's difficult to predict where things are going to head over the next month, over the next 3 months. And I think a lot of traders find themselves on the wrong side of trades because they just are not following the fundamentals. They're following a fear trade or something along those lines. But of course, I think you and I both know that it's a lot easier to look at this from the long-term perspective, that after that period of acute distress, if we see precious metals drop even to new cycle lows, that we know that long-term the fundamentals are very bullish, and that things like central banks starting up the printing presses again. Of course, the ECB officially hasn't stopped yet, and of course, the Bank of Japan might never stop. But once we see the Fed begin quantitative easing again, once we see them lower interest rates to 0% or potentially negative, that's when you're really going to see a lot of money flowing to precious metals, because that's I think that's extremely bullish for them because of just how bearish it is for the U.S. dollar.
Now, moving forward here, kind of getting back to the election, what is your perspective on what this, 2018 election tells us about what's coming for 2020?
Yeah, that's a great question. Back when, again, going back to 2016 election when Trump was elected, I will admit I did not expect him to get elected. Not that I totally bought into, the mainstream media's propaganda about the polls and whatnot, but I saw him as an underdog, and to be fair, he didn't win the popular vote. He very well could have lost that election, but when he was elected, right away, one of the first thoughts that came to my head in the following weeks was has very slim chances for 2020. Not just because because it was a tight election or anything like that, but mostly because I see the economy as being a huge determining factor in what happens in 2020. And I just don't see a scenario where the Fed can continue tightening their monetary policy. The ECB can they're halting quantitative easing by the end of December. The Bank of Japan is slowly moving in that direction. And of course the Chinese economy is weakening. I don't see a scenario in which all those things can coincide and somehow this economic expansion can continue through, November 2020, during that election. I think that during that period of time, we're going to have a significant downturn in the economy. I think that's going to be a huge determining factor in whether or not he wins. Don't get me wrong. He's going to try his very best. The right will try their very best to spin it, to blame it on, Democrats taking the House and causing gridlock in Congress, and it just stops them from being able to get anything done. I don't think that's going to play a huge role in it. The right, and certainly Donald Trump, they've already tried to start shifting the blame to the Federal Reserve. And one of my hopes from this is that, hey, maybe, some on the right, even some on the left, can start to see the threat that the Federal Reserve poses to our economy, to our currency, to our country. But as a whole, I do think that Trump is going to take the fall for it. Whether he deserves it or not, that's for you to decide. But I think that the fact of the matter is that you're going to see a lot of people, certainly almost everybody on the left, a lot of independent voters, even some on the right, will see Trump as the bad guy. And I think that is seriously going to put into jeopardy his election chances in 2020. And with me saying that, I know inevitably you're going to have people comment saying like I'm some sort of a liberal hack or something, which is no. I'm trying to take this from an objective perspective, regardless if I want him to win or not. I just think his chances are pretty slim because I think the economy is going to be a huge determining factor in the 2020 election.
Very, very interesting. Yeah, that's a really interesting perspective. It is obvious. It is often the economy that really dictates who wins the election, right? If the economy's good, people want more of that. If the economy's bad, well, they want a different guy, it seems like.
Well, yeah, absolutely. Going into the 2016 election, the economy should have been a tailwind for the Democratic Party, and maybe it was to some extent. But I think you had from the right, they were able to control the narrative to some extent. They could come out and say things like Obama hasn't been able to get a year's worth of GDP growth that was above 3%. It was a very lackluster recovery. You had Donald Trump out there in debates with Hillary Clinton talking about how the stock market's in a bubble and interest rates will just rise a little bit and the whole thing's going to come crashing down. Of course, he wouldn't be talking about that today while he's in office. But I think that a lot of people kind of realized that recovery was not much of a recovery. It was very muted compared to recoveries that we've seen in the past. And I think, again, going into the 2020 election, if we're right in that rising rates pop bubbles in that we're going to see some sort of financial crisis between now and 2020, or a major downturn in the stock market, downturn in the economy. That's going to be that's going to be on the scale of something like the financial crisis back in 2008, and absolutely people are going to pay attention to that, and absolutely that's going to sway voters' opinions. Of course, there's other long-term trends as well. Again, without getting too political about it, things like immigration, I think continue to be a tailwind for the Democratic Party, at least for the time being. You take, for example, my home state, Minnesota. It wasn't that long ago that Al Franken, who recently stepped down from his seat, but when he was reelected, he won reelection by it was like a couple hundred votes, it was extremely tight, and yet you saw a huge victory by all Democrats in the state this year. And again, not to get political, not to be pro or anti-immigration, but the fact of the matter is that Minnesota is a great example of a country or a state that's seen a ton of immigration from, Somalia, from, of course, certainly south of the border. And I think that's kind of the broader story for the United States, whether you're for it or against it or whatever. The fact of the matter, if we look at it objectively, immigrants from South America, from Central America, from the Middle East, from Africa, they tend to vote left. And so that's another thing, again, without trying to get too political, too much into this immigration debate, that's going to be a tailwind for Democrats going into 2020 as well.
All right. Well, Matt, thank you so much for joining us today.